Okay. Well, I'm going to stop recording for a minute.
I mean, that takes a lifestyle, or sorry, that
Yeah.
takes a lifetime to really master. So, I'm not surprised that
Yeah.
that has happened to you. I'm sure it's happened to me 100 times.
Yeah. Yeah. It does happen. I just started recording. So for those of you who are watching this later, what we're talking about is position sizing and how when you really, really feel right about a trade, like you're pounding the table on a trade, if you just pile in all at one, uh, all at once, ask yourself this. Okay, why am I piling in right now? Like, okay, I think Nvidia, here's a spoiler alert, I think the damn thing goes to 2000 or 200 post split. And frankly, I don't even think I'm out there on the wild frontier on that. I think it's intuitively obvious to all but the most casual observer that this stock is going a lot higher. And I'll tell you why in a little bit. But the point is, so like, let's say I really, really feel strongly about this. And so then I'm going, okay, I'm all in. Now, why am I all in at that specific time? Am I all in because I see the stock is moving higher? It's telling me what I know is going to happen. It's like, there it is. The stock's moving. Oh my gosh, I got to get in. I'm so right about this. I'm going to make so much money. I'm Catholic. I almost feel guilty in advance for making this much money, but I think I'll fight through the guilt and go ahead and buy anyway. So I'm all in. And then what happens? As soon as you're all in, the stock inevitably pulls back. And why does it pull back? Because nothing goes up in a straight line forever. Even the most parabolic stocks will pause. And so the point is, if I'm all in on kind of a FOMO entry, then when the stock pulls back, I've taken a big position at a high level. And now, on a dollar perspective, I'm losing a bunch of money. And so then what am I going to do? I'm either going to white knuckle it and hang on, or I'm going to say, oh crap, I can't believe I did it again. Boom. And I punch out. But then here's the thing, you can still be right about the stock, but wrong about the entry. So you're in high, and then the stock pulls back. Suddenly you're a risk manager, and now you have to sell your position or sell most of it because you're losing money. And then what does the stock do? The stock ultimately reverses again and starts moving higher beyond where your entry was. Now all those call options that you bought that were down 25 or 30% when you sold them would now actually be up 10 or 15% had you just ridden through it and not done anything. And then ultimately, maybe the stock goes and does whatever you think it's going to do. And it would have been a monster trade if you had just piled in and then closed your eyes and didn't look at it. But who's going to do that? I would never do that. I would never do that because that's just flat out gambling. And so the point is, even on a stock that you truly, truly feel strongly about, to just go all in, like push all your chips into the middle of the table at one time, is you damn sure better be right. You better be right about that. Because if you're wrong, it can be really devastating. And if you're wrong for a while, and then it goes up in your favor, you've probably liquidated a lot of your position for a loss. But here's the second scenario. Are you, rather than piling in because of the FOMO trade, because you see the stock running and you got to get in, if instead you saw the stock running and you see the pullback and it fades a little bit and it finds some support, Now, are you piling in? That's a better argument to make, because now you have an identifiable low that you can base your risk on. Okay, I see the stock's up and then it's come down. It pulled back 5, 6, 7, 8%. And now, oh, I'm seeing buying coming in. I'm seeing it kind of flatten out there. So you know what? This is my entry. I'm going to go ahead and take a position here, but I get to keep a stop right here, because if the stock falls lower than this last low that I'm basing my analysis on, well, then I need to get out because I'm wrong. And then I take a little loss on a big position and I'm still okay. And then you start the process again. And by the way, maybe it turns out that you're completely wrong about the stock to begin with. So the point that I'm making is, even if you've got a pound the table, this is the one trade, you still need to trade with control. You need to trade in the way that you're supposed to be trading. And you have to realize, you have to embrace the horror that you're never going to get it all. You're never going to be 100% piled into a stock at just the right time and then go ahead and get out at just the right time, for the pure and simple reason that we don't like to lose money. And we see so much of an account, or we see just such a huge position on our trading platform, that we just start to zoom in, and that's all we look at. And then every single tick means something. So it's really important to be trading within yourself, even on a stock that is just a monster stock, which I really do think Nvidia is, which I'll get to in a sec. So, I'll go through, first I'll just go through kind of my general thesis and on the market, and then we'll look at the active trade list real quick. But then I really want to take some time on Nvidia. God, I hate it when I miss periods here. It's a pet peeve of mine. So, okay, I'm going to take me off the camera because I don't really think you care to look at me. I wouldn't this early in the morning. So, summer rally, we're still going strong here. I think that hi, Riley. I have my little Mexican street dog beside me. We're not going to go over PetSmart today, sweetie. Okay. Anyway, so here's a monthly chart of the S&P. And sometimes it does help me with my big picture if I just look at a monthly chart. Like, what is bearish about this chart? What's an indication that the S&P is going to go lower from here? If you can see an indication that the S&P is going to go lower from here, go ahead and type that in the chat box, because I sure can't think of one. This is a market that wants to go up. But then what I'm really looking at here are the Qs, where I think this is likely to just continue to lead the market. And if you look at the market caps, like this is a cap weighted index. Nvidia is the third highest weight at 7.25%. Microsoft is the highest at 8.7. You can see Apple at about 8 and Amazon at 5.1. So Nvidia is a huge part of the Nasdaq, and it's really, really on fire. And I think it's going to continue to go higher. And I'll tell you why in just a minute. But first, let's just look at the broader market. We had been just a month ago down at fear. We've been gradually ticking up here into the greedy area. Remember, greed is good. Right here, this is a good thing. If the sentiment is neutral, it really kind of means that the market's not doing much of anything. It's just kind of drifting around. But when you see this needle start to tick to the right, that's an indication of a healthy market. When it starts to go into the 80s, even like into the 90s, that's like parabolic move where everybody's really, really feeling awesome, which is a time that you really want to make sure you're protecting your gains. Doesn't mean that you want to get out of the market, because if you're doing that, then you're timing the market. And that's kind of a silly thing to try to do. So instead, you just kind of ratchet up your stops. Maybe you cut back on some of your big positions, but you want to stay long the market, even though we're seeing extreme greed, simply because an extreme greed reading is a consequence of a market that's going really, really well. And we want to be involved in markets that are going really, really well. Do you see what I mean? A lot of people would look at this and say, oh, the market's overbought, I got to get out. Well, dude, most of the gains in the market throughout, I don't know, the history of trading have come from overbought conditions. That's the nature of uptrends, is the market's overbought, which is why, like, I look at stochastics and RSI as interesting art on a chart, but they don't really help me. They tell me a lot, but they don't help me make money. And I would wager that they don't help you make money either. If you're using them, that's great. They'll give you information, but they won't help you make money. And that's what I have to say about that. Now, so we'll go through our active trades here real quick. This is from earlier this morning, so for all I know, we're totally different here. Let me get to the list so I can see the current ones. Okay, so I'll go through these in order. So Nvidia, this is up at 1120, was up as high as 1124. If Nvidia hits this level, that's 1250. And I think, I could be totally wrong, and I'm not betting on being right. I'm just telling you, I think the stock could even hit 1250 or at least 1200 before the split. And I'll tell you why in just a minute. And it's a combination of technicals and fundamentals. We're hopefully due for some kind of a pullback. Just throw me a bone, give me some kind of pullback for a few days, but I'm trading as if we're not going to get one. So this trade is doing well. CrowdStrike, this is a little more, it's kind of choppy chop. This is fine. I like the way the stock is acting. It's higher low, higher high, but it's not going to be like a super huge mover. I think it's going to work well. And that's about it. Now, KKR, just drifting around, not doing much of anything. Bank of America, same thing. You're not going to get rich owning this, but you're not going to lose money either. RCL, this is just popping out of this little flag pattern or pennant, whatever. It's more of a flag pattern. Kind of a, no, I'm not going to turn this into a cup and handle because it's not. This is just a breakout from a pivot point and then a pullback here to test the breakout. And now this is ready to move higher. So I guess everybody's on the love boat. Soon we'll. Okay, enough of that. Most of you guys don't have any idea what I'm talking about there. Okay, so Lily, we got our stop hit on this. I think the stock still works, but the trade didn't. So I'm not going to second guess that. MicroStrategy, we're in at 1537. So we're up a little bit here. I don't know, 1676. I have cost basis at 1676, and maybe that's where I put us in again. I don't know. That's I'll if anybody has any insight,
I'll look that up, Dan.
What?
I'll look that up.
Yeah, because I think anyway, maybe I put it on again after taking profits and then just got lazy. And then Novo Nordisk, we're still fine on that. I think this is going to work okay. And then iBit is just kind of grinding around, grinding around a little bit today. So with that, I want to talk about Nvidia. Now, Andy Whitepath, who I have not discussed this with. I mean, I have, but not for the purposes of this. I'd sent Kramer. I think it was Friday. He had kind of reached out to me because he heard I had some health issues. So he reached out to me and then of course stocks come up and I type in 4 letters, NVDA 2000 or 2K actually. And so he wanted to write up on that. So he's going to be doing that today. And I went into a little more detail and I will actually send you guys the document that I sent him. And it's just bulletproof. It's kind of sloppy. Just because I had a lot on there and I'm not writing a paper for my PhD. If I was doing that, I would just use AI like everybody else does. Chat GPT, JD MBA, you're in PhD, chat PhD. That's, I'll have to invent that. But anyway, so there's a lot of reasons for that. And here's the thing. Nvidia, at least the way I see it is, and I listened to Jensen Wang's, I think it's Wang, might be Wang, his presentation recently. I haven't listened to his whole conference call, but the presentation was like 2 hours at this convention a week or so ago. And I was just blown away. I was also listening to interviews of him that on my way up to LA, ever the hellhole. I can't believe it up there. I'm sure if you live in LA, it's fine for you. But I had to go up there for a friend for a celebration of his father's life. Anyway, so as I'm sitting there on the 405 parking lot, I'm listening to Jensen talk about this stuff and I'm going like, wait a minute, this is not even about Nvidia, what's happening with Nvidia. This is about AI. And so if you're looking at Nvidia and you're saying, oh my gosh, look how much the stocks come up. Oh, look at the market cap. Look at this, look at that. You're totally missing the boat here because Nvidia is not about gaming anymore than MicroStrategy is about enterprise software. MicroStrategy is now about Bitcoin. And that's for a whole nother day. And that's something that Scott would be talking more about than me, just because if it's all about Bitcoin, then who gives a rip about MicroStrategy's enterprise software business? Answer, nobody. Revenues are flat. But in the same way, if you're looking at Nvidia, okay, they make these monster GPUs. They're going to be rolling out Blackwell, I think in the 3rd quarter, maybe the 4th quarter, but they're already well beyond that anyway. So it's not, the way I look at it is when you're looking forward, and that's what the market does, is discount forward events and earnings. If you're looking at what Nvidia is going to be rolling out, and oh, what's the adoption going to be, and this and that, I think you're absolutely missing the boat, completely missing the boat, because Nvidia, one way or another, is AI. They have software, they have hardware, they have basically plug and play hardware, where if you want to change out your GPU, all you have to do, I'm sure there's maybe a couple buttons you need to push, but you just pull it out. It's like changing a damn battery on your flashlight. You pull it out and then you put in the new one. Yes, they're more expensive, but you don't have to scrap your whole system. And so, and then Nvidia has also created software. And if Andy's listening, you're probably cracking up because I'm not explaining this correctly. But they've got software that allows you to continue to run your existing program on your old system. In other words, they're making it really, really user friendly, as opposed to, hey, you got to have our latest thing or you're screwed. So they've completely transitioned. Now, gaming, I think, if I recall correctly, I think it's still like 30% of their revenue or something like that. Somebody can fact check me on it if it's really that important. But they've completely transitioned their business. And where that's really important is to realize that this is the epitome of a can slim thing. Investors Business Daily, Bill O'Neill. This is an entirely new industry, a brand new industry that's really, for all intents and purposes, about 8 years old, give or take. It had, now AI's kind of been, it's been in development for a while, like I think since 2012, there started to be some things, but it wasn't until Nvidia came online, and I'll show you more about that in a minute, in about 2016, that things really, really took off. And so, as is often the case, other companies don't see it. And so they're not chasing it. And only now are they starting to chase it. And I've mentioned this concept before. It's not an original thought by me. Few things expressed by me are, except the obnoxious ones. Those all are. But they say that high margins equals somebody else's opportunity. In other words, a competitor, an ankle biter, somebody that's nipping at their heels. In this case, somebody that's nipping at Nvidia's heels, like AMD or Micron or even Intel, steaming heap. Even those companies would be looking at Nvidia and saying like, oh man, they've got huge, what do they have, like 80% margins, 75% margins? We can come in and we can undercut them and do just fine. We can bring out our own. Oh, wait, we don't have anything to compete with Nvidia, nothing that's on the same level as them. In fact, hell, we'll probably have to buy some of Nvidia's stuff just so we can ramp up our systems to where we can figure out something to compete with them. Are you getting my drift? Nvidia has hardware and software. They have the ultimate moat with hungry crocodiles and piranhas and sharks and, I don't know, probably a lot of other things swimming around in there, and none of it's good. And so I look at Nvidia and I've never seen it in this way before. I've never seen any stock the way I'm looking at Nvidia before, but this is actually the first time that I've really, really dug into the guts of something too. And it did amaze me that, and this was just over the weekend, the average analyst price target is $1,212. This is after their earnings report. Okay. It's at $1,120 damn dollars right now. At a 1212 price target. The stock has to go up to here. And these price targets are 52-week price targets. So the point is, these analysts, I don't know what they're thinking, and that's a good thing because I don't know analysts and my life is not the poorer for it. I think they're just trying not to get fired, but you got to have a lot higher price target to be accurate about this at all. These are the charts that I sent Kramer, just starting on the weekly chart. And I wrote here, yes, sometimes it is this easy. The stock ran from 500 to 1,000 after a base like this. Okay, it's 100% move. And then up at $1,000, it was like, I think it didn't quite hit 1,000 at like 964 or 980, something like that. And then it's finally broken through here. Now, I wouldn't call for another double if I'm just looking at this particular chart with no other catalysts or anything like that. I would say, well, let's see if it gets to 1,200 or 1,300, and then it'll regroup, et cetera, et cetera. So I wouldn't be like pounding the table here on this. I'll tell you why I am in a second. But if we look at the daily chart, and this is for a tighter time frame and a lower price target, even this last base, which was 210 in depth, once it gets up here and it just breaks out, which it did last Thursday, a 210 rally takes it to 1184. And that's $60 higher than we are right now. Well, $63 higher than we are right now. This is totally doable, but this is the thing. It splits 10 to 1 on, it starts to trade on Monday at, at 1/10 the price. So this is when it splits. If the stock is at, if the stock's at $1,100, then it starts trading at $110. A stock that's trading at $110 that goes up to $120, nobody really talks too much about because it's only $10. And then it goes up to $125 and then $130 and then $135. Nobody talks too much about it. How many stocks do we see today that are doing just that type of thing? Answer, a whole bunch of them. The point is, when you just look at the dollars, there's not a whole lot of difference between $100 and 120, or 120 and 150, and even 150 and $200 when the news is good, when the earnings are good, when the industry is expanding. You expect a stock like an Nvidia to be running higher in the same way as you would expect a stock like Microsoft or Meta, or, look, all the Fantastic Seven or the Sexy Seven or whatever the heck it was. You would expect them to be moving higher when their respective industries are growing. So this 10-for-1 stock split, in my mind, is a huge advantage, because it doesn't even, the fundamentals aren't even implicated. So this is really what I'm talking about. So Nvidia in 2016, they built this GDX1 AI supercomputer. That's when it really started. Now, prior to 2016, Nvidia was in a base for 3.5 years. And I think it was about $5 or something. And then in 2015, before this thing was released, it broke out and it ran 1,100, didn't run the entire 1,100% before the thing was released. But in the next 3 and a third years, it ran 1,100%. Now, these are just the stats on stock splits. They have done studies. I don't know who they are, but they've done studies showing that on average, a stock that splits runs 25% over the next year. Okay. In July of 2021, Nvidia split 4 to 1, and they ran 80% in 4 months. Does this matter? I don't know. It's interesting, but I don't really care so much what it did back then. I care what it does next. But still, you see the kind of enthusiasm for Nvidia. Now, what about this? when Nvidia drops to 150 bucks, which is in my mind kind of a no-brainer, how can Dow Jones not add Nvidia to the Dow Jones Industrial Average? I mean, compared to Nvidia, they've got some real dogs in there right now. So you got to be assuming that sooner or later, and it's probably going to be sooner, Nvidia is going to be added to the Dow 30. Also, I think that there's highly likely to be a gamma squeeze on Nvidia, and the way this works is, and I've explained this before, but the way this works is when a company reports or when somebody buys way out of the money calls, like Nvidia is trading right now at 11.21. So we'll look at the June calls here. Hang on just a second. Okay. The June 7th expiration. Okay, not too far from now. June expiration. There've already been $1,600 calls bought for 20 cents. Let's go to May. Okay. There's the $1,750 strike. Volume today has been 1,342. What's the bid? There is no bid. What's the offer? 2 pennies. We can go down to the 1400s. And again, this expires in 3 days. 27, almost 2,800 bought for 10 cents. Here's the point. Who's going to buy? And these are really actually small numbers, which also gives me the strong kind of sense that this could really run. We've got almost 30,000 contracts bought of the $1,200. And those are at 235. Now, somebody has to sell those calls. If I put in a big order, hey man, I want to buy 30,000 option contracts. I want to buy 30,000 calls and they're way out of the money. The chances of them expiring out of the money are like 95%. I mean, it's ridiculous that why would I be doing this? What a stupid thing for me to do, right? So when I do that, when I buy all of these calls, I'm buying them from a market maker. I'm buying them from somebody, and that somebody has to hedge their position. Now, maybe they've got a really good chance that it's going to expire worthless. So you know what? We don't need a hedge. Okay. They actually don't have that option. They have to hedge their positions. Maybe it's internal controls. Maybe it's because of their permissions with the exchanges, but they have to hedge their short call position. And so if the delta is 8, that means that the option trades as in the same way as 8 shares of the stock. In other words, it's not going to move much at all. But if the stock starts moving higher and higher and higher, that delta of 8 becomes a delta of 10, of 15, of 20. And suddenly that market maker that is short all of those calls that are way out of the money, suddenly that market maker saying, well, crap, man, we bought 7 shares for each call that we sold. Now the delta's up from 7 up to 14. we have to buy another 7 shares. And then, oh, the delta's up to 21. Now we have to buy another 7 shares. So originally they hedged buying 7 shares, multiply that times a bazillion, whatever the multiple is. They had to buy 7 shares per call. And, and now 2 days later, 3 days later, 4 days later, they had to buy 3 times that many, from 7 up to 21. So you're sitting here as a shareholder, and all you know is the stock price is going up and you're happy. You're not even aware of all of these dynamics that are happening in the options market that's ultimately forcing buyers to come into Nvidia when they'd actually kind of rather not, because they already got their money. And meanwhile, somebody else is seeing this and they're going, well, I want to buy some out of the money calls too. Oh, look, the ones at an even higher strike price are really cheap. I can get a crap ton of those for 7 cents.
Hey, Dan.
I'll do it. Yeah.
Sorry to interrupt. Can you share your option screen? We still see the Nvidia slide.
Well, I'm not even, yeah, no, that's fine. I'm not even really looking at,
Okay.
I'm not really looking at the options, at the options screen. In fact, I don't want to, I get it, but I don't want to even.
Gotcha. No, that's fine. We just had some
Yeah.
people asking for it. That's all.
Yeah, no. I appreciate that. But anyway, so the point is, though, and I'll get on with it. The point is, there's a dynamic that goes on in the options market that absolutely pushes the stock higher. And I think that's what's going to happen with Nvidia. And even today, now I'm away from the gamma squeeze. We'll just say that that's super important. But look at the way Nvidia traded today. This is a daily. We'll start at the with the 1 minute chart. So the stock trades. It opens up at like 1100, runs up, and you can look at this and say, "Wow, what a huge run up!" It's less than 2%, but that's day trading. If I can make 2% on a 59-minute trade, I'll take that as many times as I can get it. So the stock's up here, and then it pulls back below the VWAP, right? Okay. But then again, this is a minute chart. Just a couple minutes later, it's back above the VWAP, and then it continues to trade sideways. But generally speaking, it's all above the VWAP. Now, if this stock happens to pull back to here, I seriously doubt that it will. But if it does, what do you think is going to happen? There's going to be more buyers that are coming in on this stock because it's getting close to the average price for the day. Nobody wants to buy too high, which was what this kind of spurt was all about. So if you go to the 5-minute chart, you'll kind of see a similar dynamic. But what I'm showing you is that the stock is consistently trading higher. There's a lot more hollow green boxes than there are solid red boxes. And then if we go out to the 15-minute, you'll kind of see the same thing. The 30-minute, you see the same thing as well. So this is a stock that's still under buying pressure. And so I got a pretty strong feeling that by the end of the week, you're probably going to be seeing some of these price targets raised. You just will. So let's get into the numbers here. So in 2024, the estimate, because we're still in 2024, is basically $13 a share. That's almost 300% from the prior year. Now, the estimate for 2025 is 25.38. That's basically a double from this year. But here's the thing I mentioned at the outset, this isn't really about Nvidia, it's about AI. So if you think that AI is pretty much peaked and, well, that was kind of a good run while it lasted, but I think AI is pretty much played out. If that's what your sense is, then Nvidia is definitely not your stock. But if you're looking at AI as a field that is actually still in its infancy, then you have to look at these EPS numbers and say, well, how do you even know what Nvidia is going to be making in 2025? That's a year and a half from now. And then in 2026, really? You're going to give an estimate for what Nvidia is going to be making 2 years from now? Like, how are you going to do that? Because the field changes just by the nature of what it is. I mean, people are using AI in order to work on AI. It's like this, it's just a feedback loop that gets bigger and bigger and bigger and faster and faster and faster. And Nvidia is right there in the middle of it. And everybody, it's like they're the hub on a wheel, and all the spokes have to be attached to the hub. And I highly recommend that you watch any presentation, any recent presentation by the CEO, and you will see, first of all, this guy's smart as hell, but there are a lot of people that are too. So that's not really important. But he's laying out what NVIDIA's capabilities are right now. Like they can basically deliver the internet to you in the blink of an eye. Literally, the internet. Do you want everything that's on the internet? Sure. Okay, you got it. Anything else? Anything else you need? A cup of coffee. I mean, these guys are monsters. But if you look at their current PE, it's 58. Their historic PE is between 25 and 155. So a PE of 58 is actually on the low side. And again, look at these numbers here. Their gross margins are 76%, and they've got 80% of the GPU market. And by the way, nobody can compete with them right now. Again, your high margins are my opportunity. Okay, who's saying that? Where's the competition? Because there should be competition, but there's no competition. There are cheaper things out there, of course, and there are companies like the iPhone doesn't need to rely on NVIDIA's fastest chip, fastest GPU. They don't need the fastest chips, but a lot of companies do. We'll put it that way. And so when it really comes down to competing with the GPU market, there really isn't any true competition that's going to eat into these margins too much. And by the way, we're not talking about cheaper computing. We're talking about more delivery of information. So people aren't really looking at, oh, we got to cut costs. We got to cut costs. We're cutting costs. Oh, look at us. We can help you do what you're doing now for cheaper. That's not really where the growth is these days. It's actually more output as opposed to less outlay in capital. So over the last year, though, their earnings have grown more than 10x. In 2022, their market cap was 28 billion with a forward PE of 25. Okay, 280 billion with a PE of 25. Now it's 2.5 trillion with a forward PE of 41. So they've grown 10x, and their PE, I shouldn't have shitty in there. That's just me in Kramer speak, which is a crappy way to value high growth companies. Their PE hasn't even doubled. By the way, if you've got a money manager and they're running your money and they talk about buying cheap PE stocks, you really need to take your money away from them, because that's not the good metric to be using. Not at all. So this is the thing. Again, and I'll kind of leave you with this, I guess, and then we can discuss. If you're just looking at the internal growth numbers, you're kind of missing the boat. Because like, let's say, I don't even know the right metric or the right verbiage to use. Let's say the AI market is twice as big as it is, twice as big in 6 months or a year as it is right now. What do you think that's going to do for Nvidia? Do you think Nvidia is going to be twice as big in a year as it is right now? No, I would venture that it'll be even bigger, because you're going to be getting more and more widespread adoption of Nvidia's products. And so, and nowadays, you can't be a ticker without having some AI component. You just can't. And so it's important to really understand that, that it's not really about how many people are going to upgrade, how many companies are going to upgrade from one thing to the next. They're going to have to continue to upgrade in order to keep up with the industry, because it's not about, AI is no longer about just taking things off the internet and giving them to you. Like, I'll do AI searches all the time for various things. But what that basically does is it just scrapes the internet and finds information that's all over the internet and puts it into a readable format for me. But that's a real rudimentary way to use AI. Now, it's actually inference. It's actually generative AI. The AI model actually now spits out unique information, new concepts based on the things that it has learned, which is kind of exactly what we do as humans. Some of us better than others, of course. But so this is just such a huge field. And I still think that a lot of people aren't getting it. This whole idea of Moore's Law, if you don't know what that is, you can go ahead and Google it. It's dead. There's no limits like there used to be on how many semiconductors can be in a chip. That stuff is just over. And so this is a really important thing for you to understand. Now, I'm going to put, I don't think I can do it, but I'll send you guys out. I'll send you guys out a link to this document that I have. Like, this is what it is, where I just kind of go into a lot of this stuff. So I'll send that out to you so you can look at it. I'm not going to bore you with it right now. So the bottom line is, like, I look at this weekly chart, and in a year, which is like out here, given the fact that we have, let's say somewhere around there, given the fact that the AI industry is growing like it is, and here's 2000. I mean, do you think Nvidia could be up at this level in a year? Because I do. It's going to have pullbacks and rallies, suck people in and all that jazz, but it's not going to do that. And so I look at this as really kind of a generational trade even now. And I saw an email from somebody this morning asking, and I know this was just like, can you answer it here in the webinar? I've had Nvidia since like 453 or something. Should I be adding to my position? That's something that I can't really, I can't really answer specifically, but I'll just say you want to be building your position on any kind of a pullback. I think maybe you go ahead and add, but you got such a nice cost basis in it to just be buying, and then on your new shares say, okay, well, I'm not going to lose more than 8% on those or something. Then that's one way that you can be adding to your position. But just overall, I just think this, I think enough about this stock that I just really decided to focus on this particular stock today, and a couple other stocks to be watching are Synopsys and Cadence, because they're pretty tied in with Nvidia as well. And there's others too, like Taiwan Semi is on fire. The one issue that could be a problem, I don't think it's going to be, but nobody asked me, that could be a problem is Taiwan Semi is actually the equipment manufacturer for Nvidia. So if supply can't keep up with demand, then that could be a problem for Nvidia. But I want you to think about this. The market looks forward. And so it's one thing if there's no supply, because there literally is, it doesn't exist anymore. Like, oh, the supply of gold sucks because we've discovered all the gold on this planet. That's a problem if you own gold stocks. But on something like this, if there's an issue with supply, you can make darn sure that they're going to be doing whatever they can to increase the supply to meet the demand. That's different than if there's a demand problem. And what I'm seeing is that there's going to be no foreseeable waning of demand. The demand is going to be there for the foreseeable future in Nvidia. Now, somewhere along the line, someone's going to come with a credible competing product. You have to assume that. I just don't know who it is. I don't see anybody doing that. And neither does anybody else, which is why these other stocks aren't performing like Nvidia is. So anyway, so that's kind of all I have to say about Nvidia. But we've got some questions. Scott, you want to cover this?
Absolutely, Dan. Firstly, I just want to say great job, man. Like seriously, the fundamental case, the technical case, the conviction call. I've never seen you do this kind of analysis before, and I love it. I think it's like next level, because you're not just saying, yeah, buy this, I think it's going to go up. It's here's why I think it's going to go up. Here's my time frame in which I think it's going to go up. And, I'm putting my money behind it. Don't just, don't just take my word for it. I'm trading this myself. And so, this high conviction call, my friend, is super strong.
Well, thanks, man. I appreciate that. I do. I don't think I put that in here, but I told Kramer that I thought all the analysts were pussies. I did. I said it. Because to have a price target, a 52-week price target of $1,250, like, dude, what a waste of a 1, a 2, and a 5 and a 0 digitally. $1,250. What are we doing here? Anyway, so I see this kind of stuff, and this was one of the reasons that I got so bullish on this is I see these analysts that are absolutely dipsticks talking about this stuff. It's just, look it, I could be wrong. And if I'm wrong, you guys know me. I'll be the first one to raise my hand and say, you know what, God, I totally led you guys astray. I'm so sorry. The silver lining for you is I lost my butt too, because I had a huge position. I did put my money where my mouth was, and my mouth turned out not to be spewing out a bunch of stuff that didn't work. So I got to acknowledge that I was wrong. And so I will be the first one to admit that I'm wrong. But when I've been doing this a long time, and that doesn't mean anything, it shouldn't mean anything to you. But the reason I say that is because I've been around the block enough times. And during a lot of those times, I didn't really know enough to know what I didn't know. and to also know what I did know. And so I'd listen to these people on TV and go like, oh, well, that guy's being interviewed on CNBC. He must be really smart. Or, oh, he's writing for PMS LSD or whatever, the MSN, whatever it is. He must be really smart. Okay, well, now I am one of those guys. And I know what I know. And I also know what I don't know. And there's a lot of things that I don't know, which means that there's a lot of things that you see people say and talk about on TV and on their stupid ass $1,200 price target. They don't know what they're talking about. I had a money manager. He's kind of a random guy that was managing a very, very small account for the company for various reasons. The reasons aren't important. And so he wanted to talk about ideas for investing this amount of money. And it's really small. It's kind of a rounding error almost, but then money's money. And so then he started talking about a 3-year time horizon on biotech because of some guy with a PhD from MIT who specializes in biotech and who has a pretty good track record. And I'm thinking to myself, 3-year time horizon, I'm going to be preparing for my 70th birthday. I have a 3-year time horizon for my new knee, not for my trading account. And so what I'm talking about is making money now, because the more money you make now, the more money you have to compound later. To get 50% return on $1 million is awesome. Now you have $1.5 million. Okay. I would rather get 50% return on $1.5 million or on 2 million or on 3 million. And I only have a limited amount of time on this earth. And so I want to get as much money as I can, as quickly as I can, so that I can continue to compound that to a point where now money's never really mattered that much to me, but I do know that it's the way you keep score. I get that. And I like to run up the score. But there will come a time when you look at the amount of money that you have and you say, okay, well, I just want to live my life now. And so if you're not at that place, welcome to the party, because most people aren't. But make no mistake about it, that's where you want to be. That's where you want to get. Most people have no money saved up for retirement. Most people. It's really tragic, but that's for another story, and it ain't my story. But most people are counting on working for the rest of their lives until they drop dead bagging groceries at Walmart. Don't be one of those guys. And the way you do it is fortune favors the bold. You need to get out there and you need to put your money on the line. You need to be thinking you're putting your money on the line, but you're not gambling. Okay, don't gamble. Be a trader, be a speculator, be a risk manager, but you got to hang it out there, put it out there, and go make some money. And if you can adopt that mindset, you're going to do really well. And by the way, random thought, because I think this is coming out later today, I don't even handle the marketing for us anymore, which is awesome. We're going to be releasing Trade Track finally. And it's still in, I would say, beta testing mode. And the price is going to be, I think it's like $46 or something like that. It's a serious rounding error. But the reason that I mention this is because of what I was just talking about in my bullish Nvidia and let's go make some money rant. You need to always be managing your risk. You need to know how much money you have on the line. And that requires knowing if the fit hits the shan, where's my account? If all my stops are hit, where does that leave me? That's one of the things that you need to know. And you can get that in a glance on Trade Track as long as you're entering your stuff. You need to know where your risk is on every single trade. And you could say, well, wait a minute. You have like 70% of your account in one stock, and you're only risking 5% or 4%. How is that possible? Your stop must be super, super, super tight. No, it's just that you've been entering at the right time. And so your risk management is so tight that you have a small amount of risk exposure for a large amount of equity exposure. You can do this stuff if you are tracking your trades, if you're solid on your trading process. This is so important, guys. It's so important. After trading, I think I started, well, I bought my first stock in like 1989 or something. It was IBM. I even forget where I made money on it. It was from a newsletter by a guy named Richard Band. And anyway, but I've been really trading professionally since 1996 or 97. So why is it that after all this time, I finally come up with a platform to track your trades? And it's because I got tired of being a yo-yo guy. I'm going like, I should be absolutely tonning it for all the time that I've been trading and all the time that I've been teaching people to trade and talking about trading. I should be absolutely crushing it. Why aren't I? And when I started really going through it, I won't tell you the whole sequence of my thoughts, but ultimately where it got to was I need to be measuring everything so I can figure out the why. So I can get the answer to the question, why is my account yo-yoing? Yes, I'm making money, but for crying out loud, come on, man. I should be doing a lot better than this. What is the answer to that question? Then I realized that the only way I could find the answer to that question is by tracking all of my trades and not forgetting about them. I mean, I do forget about a trade as soon as I'm done, but it's already tracked. And so the data doesn't forget about it. I just put it out of my mind so I can focus on the next one. But the lesson remains. The point is, if I'm tracking my trades, I'm learning and I'm measuring. If I'm seeing that my holding period for winners is like 3 times as long as my holding period for losers, I think, okay, I'm doing it the right way, because you have to hold for longer in order to make more money, unless it's like GameStop and you hit it right. But if my average win is 4% and my average loss is 3%, okay, well, that's bad trading, because I'm not making that much more than I'm losing. And I'm not going to get excited about an average gain of 3% or 4% when I'm only batting 500, 600, 700, whatever it is. Maybe I'm batting 300. Okay, these are all things that I need to know, because once I know them, I can improve them. I can say, oh, geez, wait a minute. I'm doing really, really well on my trading, on my wins and losses, on my average gain per average loss on a percentage basis, but I'm not really making that much money, which is what it comes down to. And listen to me, I'm giving you pearls. If my trade expectancy is that I should be making $3,100 on every trade based on what my history is, okay, that's fine. But it may not be fine, because if I have a really big account and I'm only making that amount of money on any trade, now I have to say, okay, well, what percentage of my account is actually invested? Maybe my positions are such that when I feel like I've just loaded to the gills with stocks, I look at how much money in my account is actually invested, and it's only 40%. Okay, well, sometimes in the market, I should be on margin when the market's really rocking. The point is, all of these little things, they all add to your bottom line. But if you're not tracking all of those little things, how do you know how to improve your bottom line? I have the answer for you, and it's irrefutable. You don't. You don't know how to do that. So that is why I built TradeTrack. There's other stuff out there, and I've tried some of it. It just didn't work for me. Some of it was too complicated. Like, I don't really give a damn if I bought at 932 or 948. It's not really part of my world. But knowing these certain numbers, guys, I'm just telling you, they're going to make all the difference in the world. And I would just challenge, and I'm kind of flippant about it. I think I might have said it in a video. But just know that I'm talking to myself as well as you when I say, like, okay, well, so if you're not gonna track your trades, just know that basically, why wouldn't you want to do that? Well, because your trading sucks, or you don't want to find out how bad you suck, something like that, which is pretty flippant, pretty condescending. And I don't mean it that way, because I could be looking in the mirror and saying that to me. The point is, if you want to get better, track at your trading, if you want your time to be worth more, track your trades. That's it. You use an Excel spreadsheet. I don't care if you use mine, but you got to track your trades. And I'm not going to turn this into a big sales pitch and say, oh, let me show you how to do this, let me show you how to do that. I'm not going to do that. There's plenty of time for that kind of stuff. But as I'm looking at my trades right now, my batting average over the last 3 months, although I want kind of 6 months. Okay, well, it's being stubborn, so I'll just do 3 months, is 59.26. My average gain is 18.11%. My average loss is 2.67%. My win-loss ratio is 1.45. My adjusted win-loss ratio is 6.68. And my expectancy on each trade is $1,629.75. Over the last 3 months, I've earned $90,000. Okay, those are my numbers right now. Those are actually the active trade lists numbers. They're not mine. Well, they are, but they're the active trade lists. So anyway, the point is, this is the stuff you guys need to know. Okay, so, geez, I've been talking all this time, Scott. We haven't really gotten into any questions.
That's okay, man. You're onto some really important.
I think this stuff's really
stuff.
important, man. I'm so passionate about it.
Absolutely. No, and thank you. I mean, you've been working on TradeTrack, Dan, for years. It's cost you a boatload of money to put this together. You could have quit. You could have said, no, you know what? Actually, it's not worth it. But, tracking your trades is something that I know has always been important to you. Even when I was a member, you were talking about tracking your trades. And so this tool, I think, is really going to put the power in everyone's hands to be able to see exactly where they need to improve, what they need to improve on. Because as you've said it before, until you know your numbers, you're actually, impairing yourself to get better by doing this.
Yeah, it's true. Like, even just the numbers I was ticking off, I was looking at those and going like, okay, I need to increase my position size, because I need to bump up my trade expectancy. But yeah, so you have to learn this kind of stuff. And I looked at it for a very, very brief period of time. I could have got some program that somebody else whitelisted. They'd put my logo on it, and then I pay them a small fee or something. But I thought, no, I just want to do it myself, so everything makes sense to me. And if you're here, you're listening, you're watching what I'm doing, then the hope is that everything will make sense to you as well, because it kind of comes from the same person. So
absolutely.
Anyway.
Okay, Dan, let's get into some questions. Firstly, Steven said, NVDA, who didn't want to pile in, your August 1050 calls are working great.
Yeah, those are pretty good. What have I got? Yeah, I bought them at 82.81, and now they're at 139 bucks. I don't know what the
Ooh,
percentage is, but
nice
that's
one.
pretty good, you know.
Yeah,
And then I
pretty
got
good.
I got some others at 97.90, and they're at 110. I got some at 60.75, and now it's at 65.72. I got some at 56 bucks, and now they're 61 bucks. So I kind of strung them out in different expirations and different strikes. And for you option traders, just real quick, this is how I trade this kind of stuff. I talked earlier about a gamma squeeze. Gamma is the measure of the impact of $1 movement in price on the delta. And the delta is the measure of the impact of $1 movement in price of the stock on the actual price of the option. So it's kind of a chain. Delta is really important. If you've got a delta of 50, which is what an at the money call would be, if you've got a delta of 50, it means that if the stock moves up $1, your option moves up 50 cents. Okay, but if the stock moves up $10, your option's going to wind up moving up more than $5. And why is that? Because as the stock moves higher, the delta, the rate of increase of the delta increases by the gamma. So it's like the effect on the effect of the effect kind of thing. And it's just simply put, it's called a gamma squeeze. So as far as what you're going to buy, what strike you're going to buy, for me, as long as I'm buying long enough out so that time doesn't make a difference, I'm going to buy an at the money option, because that's the price that's going to move the most in relation to what I'm actually paying for the stock. So if the stock's at 10.50, I'm going to buy the 10.50 call. And I did. If the stock's at, and if the stock's at 11.50, I'm going to buy the 11.50 call. If the stock's at 1100, I'm going to buy the $1100 call. Like the one exception I made was I do have some 1150 calls. They're the July ones, so they have 52 days of expiration, and those are out of the money. The stock's never traded to 1150, but I just kind of liked it. I was feeling a little saucy, and so I bought those. And those are the ones I bought for 60.75, and now they're at 68. So there's a lot of ways to make money in options, guys. And I know probably most of you guys aren't option traders. I think personally you should be. And I'm going to be taking more now that I'm not doing a lot of the things that are required for the CEO of a company. I've resigned. Now I'm the founder. I'm crappy at running companies, and I know it. But now that I'm just focusing on content, I'm going to have more of a presence in Option Market Mentor. And I'm looking forward to it. But anyway, so if you're not trading options, I think you're missing out on some good on some good gains. My account's doing really well, we'll put it that way. Okay, so
That's awesome to hear. Dan, we have a comment from Brooks here asking just about your fundamental story. Do you think that there's any political risk for Nvidia, given most of their chips are from Taiwan? Do you have any thoughts around that?
I don't. And the reason I don't is because that's pretty well known. And I think that if something does, first of all, China's kind of big on making money too. And so just because they might take over Taiwan, and who knows, I know nothing about any of that stuff. I mean, I hear a bunch of stuff in the news, but the news is typically a bunch of crap anyway. If you believe the news, you really need to get out more. But there's ways around that. It's not like, okay, China took over Taiwan, so suddenly there's no more TSM. the bottom line though is I don't know. But I'm not going to be trading based on something that might happen. It's like I'm borrowing tomorrow's worries. Tomorrow, what might happen tomorrow, I'm going to borrow that for today and worry about it. And then if what I'm worried about doesn't happen, then I'm going to be like, okay, well, shit, that was kind of a waste of time. So I get the question. I think it's a good question. It's something to be to certainly consider. But in my mind, if you allow something like that, which may or may not happen, it's a geopolitical risk. If you allow something like that to impact how you're investing now, I think you're always going to be struggling because there's always something on the global scale to be concerned about. Always.
Great answer. How about ARM Holdings, Dan? ARM looks like it's pushing off the 50-day moving average today.
Yeah, let me get rid of this thing. Yeah, I think, this has been a heck of a dump here, but the way I look at it is that this thing is sold and this such a massive volume day, this really cleared out all this resistance. That's the way I would look at it anyway. So I really kind of think, we'll put it this way. I really think the chart kind of starts here because all this stuff, any weak hands here have probably sold somewhere down here. So my bet is the average cost basis. Let's do this. Yeah. This is the volume weighted average price over all trading days since this big dump. This is where the average is 106. So this is up. It's had a heck of a spike here. It's up 17%, but this isn't really truly overbought per se. I wouldn't buy it here, and you should be able to see why. But if the stock were to pull back, I think this could be a good one to have. I'm saying that off the top of my head. I haven't really looked at it at all. But yeah, if you're buying it here, just keep a stop a little bit underneath the 50-day moving average.
Great. We have a question about First Solar, FSLR.
Oh, geez.
Up
what
50%.
The heck happened there? Yeah.
Every other solar stock, I just looked through Sunrun and Solar Edge. They're all like in the gutter. First Solar is like, you know, popping.
And I totally missed that. I don't know what the catalyst is for First Solar. It's got to be a government subsidy. I say that kind of half joking and half not. Something's going on there, and I literally don't know what it is. And so I kind of went to look one time and then got bored and moved on. But I wouldn't sell it here, but I just wouldn't buy it. What I'd be doing is for today, if you're in, use today's intraday low as your reference. Intraday low is 271.50. So if you're long the stock, maybe set a stop at like 269 or something like that. So you're protecting your gains. That's just a pure chart analysis here. I know nothing about what this is, but for crying out loud, man, something's going on. They're first something or other.
Great. And by the way, White Path Andy did comment saying you're right about the software from Nvidia. Changing the chip will need a new rack from SMCI or Dell. So those are two other stocks that are, potentially benefactors of what's happening with Nvidia.
Andy, you're the man. Thanks, buddy. That's White Path. He's going to be doing a presentation, a multi-session presentation on options coming pretty soon. He's our AI guy. I'm artificial. He's the real thing. So I'm artificially intelligent. But yeah, SMCI and Dell. Somebody was asking me about Dell the other day, like, hey, that'll be a big mover on Nvidia's earnings. And I was kind of stupid. I'm going like, okay, well, I don't really know why that would be. And after listening to Jensen Huang's presentation, and Michael Dell was sitting there as well, I'm thinking like, okay, well, that was a brilliant question and a pretty dumb answer. The bottom line is, yeah, Dell's in the sweet spot, along with SMCI. So anyway, that's all I have for that.
Dan, do you ever trade the leveraged NVDL as a way to get exposure to Nvidia?
I had not even heard of this until the other day when somebody asked about it, and I thought it was like a typo, NVDL, NVDA, and I'm going like, I don't even know what that is. But since I looked, I was actually thinking about putting this on the active trade list as well. I haven't traded this. I was going to actually buy some this morning, but I just got busy. Actually, I got busy buying calls instead. So yeah, I think NVDL, if you're really bullish on Nvidia, double your fund. Yeah.
Great. And then Eddie has a question again, just about Nvidia, saying, in light of the split coming, what types of trades do you recommend? Should people just buy the stock? Should they just buy calls? Is there a type of spread that you could do? You know, is there an ideal way to execute this trade, Dan?
Oh gosh, boy, that's an impossible question. It's an impossible question to answer because it completely depends on the person. I kind of cut my teeth trading stock splits with call options back in the late 90s. And there was a certain pattern. I actually drew the pattern for somebody. I was saying, like, have you ever noticed that that stock splits, like the chart always does this between the announcement and then the split and the post announcement, it does this 3 days before, blah, blah, blah. I drew it all out. I talked with her for her name was like Darlene Nelson or something. And I talked with her about it for 2 hours, like saying, hey, see, I noticed this. She wrote a freaking book on it. Totally just stole my stuff, but I don't care. It doesn't matter. But the point is, there is a certain behavior of stocks that happen around stock splits, but I don't think that it's really relevant in Nvidia. The only way that it could be relevant is for somebody with a smaller account size. I mean, you could always wait too. With a smaller account size, if you were to buy 10 shares of Nvidia, then after the split, you're going to be able to own 100 shares. So then you could be selling covered calls. You know, you could be selling a call against it and make extra income that way. But I don't think there's going to be a liquidity issue with Nvidia, because I think that institutions aren't trading Nvidia, they're buying it. And so all this, oh my gosh, you know, the float's going to increase by a multiple of 10. Yeah, and so are the buyers, because now you're going to get the young kids on Robinhood that are finally able to buy Nvidia and stuff. So I don't see the extra liquidity as making much difference in the way the stock trades. I think that post split, the options market will explode. There'll be a much higher volume on options than there is now. I think it'll be a lot higher because people can buy more. People can buy more options on $100 stock than they can $1,000 stock. So anyway, that's
great.
what I think anyway.
Dan, we have a question. Just if someone did buy Nvidia today, where would a proper stop loss be, in your opinion?
Well, if you buy it today, then I think your stop should be certainly underneath today's intraday range. Like at this point, I just can't advise anybody to buy the stock. It's up so much. But but I wouldn't advise you not to either, because I've already told you, I think this thing goes to 2000 or 200 post split. And I don't even think I'm out there on the wild frontier. Not at all. So I would just say that you want to use this day's intraday low as a reference, because if this falls all the way back and trades below today's intraday low of a basically 1100, well, then this stock is going to reverse a little, not a big deal, but you don't want to be long the stock and ride it through a pullback, so that's kind of the only way I could describe that.
Someone's asking about Pure Storage, PSTG. Looks like they have earnings tomorrow. Do you have any update or thoughts on this?
No, it's been a good trade. Are we still long this stock? I don't think so on the active trade list, but should be. I think this is one that I said, okay, go ahead and take some profits when that market was turning here. But I don't know if they report tomorrow. I just think it's always risky to hold over earnings. If you're in at 55.89, I seriously doubt that the stock's going to come down and whack you. It's going to come down over 10% and take all your money away. So maybe if you're still long, maybe you sell half and hold half, something like that.
Okay, awesome. RD is asking about AMD.
Yeah, this could be I'd say this is definitely in turnaround mode here. I don't know when I drew these, not too long ago. But the location here doesn't mean anything. Now that this is trading back above the 50, I think it's probably going to get some traction. Yeah, this is probably going to go higher. Their earnings aren't an issue anymore. And this would be one of the companies that you say, oh, well, it's, this is going to be a competitor for Nvidia. And that may be the case, but I don't know. I would rather be betting on Nvidia than the competitor that hasn't really put out anything that's truly competition. Like, why bet on what might be when you can bet on what is?
Great. Michael has an interesting comment here, Dan, saying with a focus on NVIDIA, SNPS, CDNS, and Taiwan Semi, should people really be screwing around with Bank of America, KKR, or NVO? Like, should they focus their portfolio on this idea, on this trend, rather than have more of a diversified structure right now in their allocation?
Yes. I wouldn't be owning all that stuff. I mean, depending on what your approach is, but yeah, I mean, you could look at look at all the stocks that are on the active trade list. Yeah, but Novo Nordisk, MicroStrategy, these 1 and 3 are Bitcoin things. Lilly we're out of, but like the big dogs here are Nvidia, CrowdStrike, Bank of America. I mean, yeah, I mean, I wouldn't own, if I had a choice between Bank of America and Nvidia, where I'd be going on that. So yeah, I mean, I think that a little diversification is good, but I will say this. And I've always thought this, that diversification is the key to mediocrity. If you're really, really well diversified, you're never going to lose a bunch of money. You're never going to make a bunch of money, but you're never going to lose a bunch of money either. So yeah, I would be focusing on the big movers like this. That's $1,130 right now. Like, it broke through 1100 in pre-market trading. Here's my bet. 2 weeks from now, somebody's going to be asking, is it too late to buy Nvidia? Don't let that be you. That's all I'll say about that.
Well said. No, I'm with you, man. I mean, yeah, I'm someone who layers into winners and has a concentrated portfolio, and that's how I achieve outperformance. And so I love that idea. Okay, a few more here, Dan, and then
Yeah.
we'll get going. You've been going for well over an hour, almost an hour and 40.
Yeah.
Okay, so one more semiconductor ASML for Valerie. What are your thoughts
Yeah.
here for stocks or options?
ASML is look, it's really it looks like a lot of other charts. You know, it just looks like a lot of other charts. It looks to me like it's ready to go. It's ready to go higher, but it's still got this kind of area to chew through. And I'll make the same case as I did on the other stock. I forget which one, where maybe it was ARM, that this big downdraft here and then another one here, I think probably washed out a lot of the traders with the cost basis of up here. So I could make the argument here as well that the chart, you know, really starts here. And so it's working really well. Maybe if you could, if the stock, if you could see it pull back like $20 or something, then maybe that'd be a good entry. But I don't know whether you're going to get that or not. It does seem like this stock could just keep going. It's really, really sloppy pattern here. But yeah, I think if you're buying here, you're making money, at least $20.
Great. Christian's asking about Coinbase.
Ooh.
I know this is a stock that you put on the active trade list and they got stopped out the next day.
Yeah.
It's back above the 50-day moving average now, Dan.
Yeah.
Is this something you could rebuy?
Yeah, I wish it hadn't been stopped out. Of course, I say that on every stock that's higher than my stop price. So yeah, well, what do you think, Scott? I mean, I'm looking at it technically, and it seems like one that would be a good one to be buying.
Coinbase is always one of those ones for me, Dan. You know, that kind of harkens back to your position size commentary that you mentioned, because I've been shaken out of this because it does have big swings due to my oversize. So I definitely think that this is something you could buy, but I think you'd want it under that low at around 217. So you are risking a lot to start, but that should allow you to really sit through the ups and downs. You know, it had a $20 move from the high on Wednesday, the 22nd, to the low on Thursday, a $20 range. So, you know, even if you just buy 100 shares, you bought it at the high, next day you're down $1,000 and you're like, what the heck am I even doing? Like, this is great. So position size, I think in mind, I think you could own this here.
Yeah, I think you could too. And there are, look, I like the questions because there are other stocks that you can trade other than Nvidia. And this is one of them. I'll just put it that way. So it's nice that you guys are looking around at more than just Nvidia.
Sorry, Dan, I'm just typing one more. I'm trying to answer. We can't get to every stock, and I'm trying to fill in the blanks here. Okay, last one is from Steve. This is VRT saying it's a data center. Should you wait for a pullback or start small now on VRT?
Well, this is not a good entry right here at 105.58. The thing with this, I've read about this company recently, but it's not coming to mind, like exactly what they do. But I remember I was going like, oh, that's something that I got to keep track of. I'll just say this, I think this is a good stock to own just by the way it's trading here. Seems like the entry that you might be getting is if you can get it closer to the 20-day moving average. But my bet is that if we did 8 that would be a little more doable. I'd be using the 8-day EMA. This is a Scott type of trade, but to get
A
it closer to
momentum
the
trade.
8, wouldn't you, Scott? Something like that.
Yeah, I mean, you could do a Green Day bounce off the 8-day and then
Yeah.
use the low of the day and hopefully catch the momentum. Look at this trend, Dan. It's already in motion. You know, it's not like it's basing coming out of a base. This is
Yeah.
just higher highs and higher lows. So if you're in a trend trade, you know, you either want to use the 8-day if you're really tight, or the 21-day if you want to give it a little room. Just keep it simple, man. Look at that trend. It's going in one direction.
It's ridiculous. By the way, there is a lesson here, guys. Like, if you're long the stock here, and you can see I was looking at this several months ago, a few different months ago. But if you're long the stock here, okay, crap, I got stopped out. You know, maybe you got to stop here. You got stopped out. Okay, I hate this stock. Okay, well, wait a minute. Maybe I don't hate it. I just don't like it. I love this stock. You see this big, massive volume dump here, okay, over twice average volume on this big down day. And the next day, a move lower, but then a strong close. And the day after that, a very, very strong close. So this is like a 3-candle reversal right here. This is a great indication that this stock has just shaken out a bunch of people. And then this is what's happened. So just because you might get stopped out, you definitely want to keep track of the stock. And because like here, you see similar things back here, a pullback to test the 50. And in just a couple days, you know, the stock moved back 8-9%, something like that. And then the same thing here. At some point, it pulled back 16% in just a couple of days. And in hindsight, you look at this and say, well, man, that was a monster buying opportunity. Don't discount that if this happens again. They report on August 7th. That's a while. That's through the summer. But yeah, if you, the next time you see something like this, just be mindful that this could be your entry point. This could be your opportunity to get in here.
Great. And then finally, Dan, could you take a look at MSTR? I did follow up. You did add it to the active trade list at 1676. Current price right now is 1660. But if you look at it, I mean, it's just basing. It's just going sideways. I kind of like how it's acting right now.
And which one is this again?
MicroStrategy. You added it to the active trade list on Friday, 1676, with a stop at 1424.
Yeah, man, I'm just waiting for Bitcoin to take off.
But look how healthy this is. This looks like healthy price action.
It is. Yeah, I look at this too. Yeah. This is one of those that there's a risk that you will appear to be fixated on this stock. And I don't think that's the case here. It's more like the pattern. It's like this is a pattern that you like to see. Kind of a, I can't really say this is a cup and handle, but somebody else could. It just, I like this. I really, really like this stock. I wish I owned more, but I just own Bitcoin instead. So yeah, but I like the way this thing's trading.
Fantastic. Well, what a session, my man. You know, I think that this is really, someone said it in here, you know, this is a master class on, you know, summer investing, I think is what somebody said. Yeah, Vito said, seriously, a blanking master class in investing for the summer. Trader Bren said, awesome stuff. Leo said, great webinar. Dave said, Dan, for the first time in years, I've been a member that I've heard this tone with you. I was way too big on MSTR, traded some of that for Nvidia. Awesome presentation.
Yeah. Oh, thanks, man. Yeah, I can't remember. I've never done this kind of thing before, like I did where I'm just pounding the table on Nvidia and literally saying, you know, all these heavily degreed people on Wall Street are, I'm saying all of them, there's never all of them, but let's just say that the consensus is so wrong, it's kind of like embarrassingly wrong. And I'm like, I'm sitting here in my home office, looking out at the mountains in the backyard with, a cup of coffee. I'm not exactly sitting in the office next to Jamie Dimon. Thank God for that. But so who am I? I'm just one dude, but I'm just looking at everything in totality. And I don't understand why more people don't see this. I know Jim Ropel sees this. Scott, you know who he is.
Yeah, he's great.
Yeah.
He is on that Investing with IBD podcast that you're on all the time.
Yeah. Yeah. On IBD Live. Or yeah, on the podcast too. Yeah. And I think he was just on the other day talking about he was talking a lot about crypto, about Bitcoin, but he was also talking about Nvidia, and he kind of had the same. He had the same. I mean, he wasn't pounding the table as hard as I am here, but he did have the same thing. He was kind of like, it's just a monster. Like he was just like, I've never seen anything like this.
Mm-hmm.
This is where we're really loaded up and all that. So, and when a guy like Jim says that, it makes me feel like, okay, well, I'm not the lone wolf. Maybe the pack is small, but at least I'm not the lone wolf, and I like my pack mates.
Well, I mean, you think about the N in can slim, it means new. And so
Yeah.
any new industry, new innovation, new technology, that's what crypto is. That's what AI is. And things are just getting started. I have friends now texting me over the weekend being like, what's a good AI stock? And I'm like, well, there's Nvidia. And then that's kind of it right now. And so this is just a new sector that's coming online, that's coming on board, that we have no idea where it's going to go. And honestly, that's why I get so excited about crypto, because it doesn't have mass adoption yet. It's not we don't have a Microsoft of AI just yet. Maybe it is going to be Nvidia, or to your point, maybe it's going to be something else. But for right now, that hype train is on, and you want to layer into the leaders, the obvious trades, because when you look back, you're going to say, why didn't I buy Nvidia when everyone else was? Because then you're going to miss out on this massive potential technology adoption. I had someone asking in the questions about, what about this other stock to get, AI exposure versus Nvidia? And I don't remember the ticker, and it's not a personal attack against this person, but it was going down on the day. And I'm like, well, this stock's going down, Nvidia's going up. I think that's where you want to focus on.
Yeah. Yeah. You want to look,
keep it simple.
Keep it really simple. And also remember, you don't want to go against the institutions. You want to go with the institutions. You want to be riding on the wings of eagles. And the institutions, if the institutions are buying a stock, you don't want to be buying it. You want to have bought it. You want to let their work make you money. And yes, you want to be adding to it as the stock runs higher, no question about it. But you want to be where institutions are now, not where you think they might be going. And yeah, I mean, wouldn't it have been nice? Hey, wouldn't it have been nice to have bought Google in, I think it was 2003 or 2004, whenever they came public? I remember some guy asked me about Google when it came public. And I remember saying like, oh, dude, don't buy that. It's just search engine. They're not going to make any money on that. I truly said that. I'll admit it. The point is, wouldn't it have been nice to have bought Google back then? Wouldn't it have been nice when IBM told Microsoft, no, we're really only interested in hardware. We don't care about buying your operating system. And Microsoft said, okay. And then they went and did what Microsoft did. Probably stole all of Steve Jobs stuff, but That's for another story. The point is, it's good to be getting in on these cutting edge technologies early. And in the future, you look back on when Google or Facebook too, for that matter, with social media. There's Microsoft with software, with operating systems. Then there's Google with search. And then there's Facebook with social. Looking back on those three industries, when was early? When was it right to get in? Like when's the time where you go like, oh, that's when you that would have been right to get in. Like, oh, you could have still got in there. That was early. It spans years because we're a decade, 2 decades into the future. Looking back, it's like, when would have been a good time to buy Microsoft? Oh, in the mid 90s or something like that. Same thing with Facebook, which the stock went down initially. I remember, when would have been the good time to get in there where you were really early? It would have been years. You would have had years to get in, and it would have still been seen later as being really early. So what I'm telling you is, AI, as it relates to Nvidia, really started in 2016. And you can go just do a word search or do a internet search on there. It's easy stuff. If I can figure it out, you can. That's for sure. But this is really early in AI. Put it on your calendar. Fitzpatrick says on May 28th, 2024, stupidly, that it's still early in AI. Go ahead and mark that on your calendar. And then 10 years from now, reach out to me and tell me what a knucklehead I look like for saying that it was early in AI in May of 2024. I'm telling you guys, this is a big, big deal. And there's a bazillion people that are really, really into AI now. And I guarantee you, every single one of them would look at me and listen to the thing that I'm saying and say, well, duh, dummy, where you been? You see what I'm saying? I feel like in some respects, I'm really late on this, but in the only thing that matters, which is what goes ahead from now. Where are we looking in the future, in the rest of 2024, 25, 26, 28, 30? Looking back at this right now, dude, I'm cutting edge. I'm right there on the wild frontier. And you tell me that Nvidia, you tell me that these AI stocks are not going to be multiples higher than they are now 5 years from now. Nobody's going to make that claim credibly. Everybody knows that these are going to be higher. And you can say, well, Nvidia now is at 1138. 1138. By the way, I know Kramer's going to reach out and go like, dude, I need different charts. These aren't even relevant anymore. But nobody's going to look at this and say, okay, it's peaked. I got to sell into this. I'll buy it back when it's 900. I seriously doubt that you're going to see the stock pulling back to give you that awesome entry at $1,000. Again, I could be wrong. I'm acknowledging that. And I do think that there's a certain temptation when you see a chart like this to just really be getting too bullish. Like you're bullish, you're too bullish, like right at the top. Look at that. This just can't go on forever. And it can't. It will stall out. But like, do you really think it's going to do that? I don't. And I'm looking at my account, and my account doesn't think it's going to either. Some of these things, I've almost got a double on some of my options. I'm just telling you, if you're in this, if you're trading along with this here, You're going to be paying for SMM, OMM, CMM, whatever MM for life on this. This stuff is just, it's really, really important. So that's all I have to say about that. And it's probably more than I should have said.
Awesome session, Dan. We will get this recording out so you can watch it again and take notes if needed. We'll get the recording out as soon as possible. Dan Fitzpatrick, what a masterclass. Thanks so much.
Thanks, man. Scott, thanks for helping out. I really appreciate it, as always. All right, you guys, have a good one.